Hey everyone, my name is Tim, and today I'm going to be going over how to consistently make a 1% return on your money in the stock market using both dividend stocks and options. So, the best of both worlds. So, I'm going to be going over 3 stocks today in this video, and they're all 3 going to be dividend stocks. They're all 3 going to be high value companies, and they're going to be in 3 different price ranges. There's going to be a low tier around the $13 to $15 range, and another one's going to be in the mid tier around right here, around $50, and another one's going to be at the $100 per share. All 3 of them are going to have different yields, different payouts, but for the most part, all 3 are going to be quarterly paying dividend stocks, but you can still make 1% on your money every week, pretty much consistently, using options to sell puts and then sell calls. Not to mention, if you do get assigned, you then get the dividends for 100 shares. So let's get into this. I'm going to be going over the first stock, the Gap. Let's get into the video. First stock I'm going to be going over is ticker symbol GPS. That is the Gap. And they did a pretty good job throughout most of the end of 2021, keeping their stock in the mid 20s. But then in late November, it came out that they missed a lot of their product shipments. And so they lost millions of dollars and their stock dropped 15% basically overnight. But even though this says right now it's a strong sell, I disagree. Like, I would be willing to do options on this, and I'll show you why. And if you can see here on the income statement on the right side, on the fourth quarter, they had good revenue, good net income, good profit margin. And that was good all the way until quarter 3 of 2021, which is kind of when everything started, and then it started to bounce back a little bit in Q4. I'm expecting that it's going to come back and do well again in starting quarter 1 once those details come out. But it is a good stock, quality stock, and I believe in the company overall. I've done the research, so I personally am fine with owning the stock. Another reason why I'm happy to own the stock is it has a good dividend yield. It's at 4.25%. It has an annual payout per share of 60 cents. So that's paid out quarterly, and that's 15 cents per quarter. They do have a low payout ratio of 25.17%. So that means 25% of their profits are going to dividends and 75% are going to grow the business. So they do have a negative growth rate over the last 5 years and no dividend growth, but again, I'm fine with that. They have a good yield. It's not too high, not too low. They have a good payout ratio, and I am happy with that. Now, to show you what I mean about getting a 1% return just about every week, GPS, as well as the other 2 stocks I'm going to be going over, sell weekly options. So you can sell options every week. I do not buy calls or buy puts generally. I just don't. I prefer making money in the stock market. For instance, on the date of ending March 18th, you can see here at the strike price of $13.50, you would get 26 cents per share in premium, or $26, because these options are in 100 share stacks. So one option is 100 shares. So you would have to have $1,350 in collateral to sell this, but you would get $26 back, which is almost 2% return on your money. Or if you want just a straight up 1%, you can do $13 strike price. It has an 81.64% chance of staying out of the money, which means you would not be assigned the shares, and you could just simply next week sell another put, but that would get you $13, or exactly 1%. And then if you eventually do get the shares assigned to you, you would get 100 shares. So that means on the ex-dividend date, as long as you have those shares, you would get the dividends at 15 cents per share per quarter, or $15 for owning 100 shares. And that's every quarter. Do not sell a call when the ex-dividend date is going on, because if the share price jumps up above your strike price, it could be called away early. But if you are going to want to sell calls, you can do that. Again, for March 18th, let's say as an example, you had sold a put at $14. You could then sell a call at that exact same price, $14, you would get right now 42 cents or $42 total, because that's 42 cents per share. And so that is actually 3% return right there. So you can keep doing that every week as long as you make sure you're careful on the ex-dividend date. The next stock I'm going to be going over is the middle. This one is going to be the one that trades for $58.54, and it's none other than Coca-Cola, a dividend king, which means they have increased their dividend every year for over the last 50 years. As you can see, over the last 6 months, their stock has actually done really well up until the beginning of March, where it dropped off. You can see on the bottom right at the income statement how their revenue has slowly grown, and so has their net income, and net profits have grown a lot over the last year also. So they're doing really well. I personally prefer Pepsi, but Coca-Cola is a great dividend company, and I would love to have it in my portfolio. It has a 3.04% dividend yield. It pays out quarterly also. That turns into 44 cents per quarter per share, or $1.76 per share per year. They do have a 72.10% payout ratio, so 72% of their profits go to dividends, and they just keep the other 28%, which makes sense. Coca-Cola is such a big company, it doesn't really need to grow itself anymore. It's already a huge company. It's got a 5-year growth rate of 3.66%, and it has grown its dividend over the last 59 years. So again, this is a dividend king. This is a great company to invest in and have in your portfolio. The one downside to Coca-Cola is you're going to get just a tiny bit less than 1% when you do options with Coca-Cola, unless you want to be very close to in the money. For instance, selling a put for this upcoming Friday. If you want to make more than 1%, you would actually have to go to the 58.5 strike price, which is just 28 cents away from what the current share price is, and that would get you about 1.5%. But if you wanted to be just a tad bit safer, go down to $58, then you would get $56 in premium, and so that's just a tad bit less than 1%. And the same thing applies if you're selling calls once you have 100 shares. For instance, say the 100 shares at $59, you could sell calls for $57 premium, and so that's again just a tad bit less than 1%. The nice thing about options also is it's easy to see what's 1%. Because it gives you the 1% here at the strike price, since you have to multiply this by 100 to figure out how much collateral you have, so that means the strike price is 1% automatically. So the last stock I'm going to be going over in this video is the one that's close to $100. That's going to be ticker symbol EMR, or Emerson Electric Company, and they are currently trading for $92.32, and they have a pretty good stock price. You can see over the last 6 months, it's gone fairly well back and forth between, I would say, about $100 and about $88. It just stays within that $12 range. As you can see on the right side on the bottom of your screen, their income statement is showing, for the most part, except for the first quarter so far, a steady increase in their revenue, a steady increase in their net income, and their profit margin is skyrocketing. They are a very good company. They are also a dividend king, so they have increased their dividend rate for more than 50 years. Now, they do have a smaller dividend yield, but this is a more expensive stock, so they have a 2.22% dividend yield, which comes out to $2.06 per share per year. They have a 46.99% payout ratio, so they pay out a little bit less than half of their profits. They have a 5-year growth rate of 1.33%, and they have grown their dividend every year for 64 years straight. And they pay quarterly, and last month was a dividend paying month for them. So their next one isn't going to be until May. EMR is fairly nice options-wise. As you can see, I'm selling a put for this upcoming Friday. You have a couple options. You can sell a put for $92 strike price and get $138 in premium back. So that's more than 1%. That's about 1.4% actually returned for that week. Or if you want to be a little bit safer, you can go down to $91 and still make more than 1%. It's only like 1.15% return on your money at that point. But it's a fairly good stock, and it's pretty good to have a dividend king in your portfolio. And then if you were to sell calls once you get 100 shares, or if you get assigned on your put, depending on where you sold your put at or what your cost basis is for your shares, just say hypothetically you have a cost basis of your 100 shares at $92.50. You can sell a call right now for $145 in premium, and that's about 1.5% right there of return. And you can do that every week. Just, I would possibly be a little bit safer, like even if you want to cut your return a little bit, just to make sure that you keep your dividend stocks once you have them. You can go down to just 0.5% if you choose to. I'm not saying you have to. You don't have to do any of this. This is not financial advice. It's just information, and you can use it however you will. But if you want to be a little bit safer, you can go down to 0.5% or so return, have a much more chance of keeping your dividend stocks, or even staying out of the money for selling your puts. So that way, if you don't necessarily want to always own the stock, you can just sell premium and just get paid every week around 0.5% or so, which is still, considering you can do that every week. If you do 0.5% every week for the year, that's going to get you 26%. So that's still much better than the average stock market return. I hope you found this video helpful, and I hope you enjoyed the information and helped show you how you can make steady income every week using both dividends and options, which happen to be two of my favorite things in the stock market. And don't forget, if you liked the video, don't forget to hit the like and subscribe button down below. It does greatly help out my channel. And I hope you have a great day, and good luck in the markets.